So, what we've been seeing right now in the financial market with equities trading at large multiples above book value, it's creating some opportunity in other asset classes, but it also oftentimes what we see is we see um, maybe non-professional investors that get glamored by the rise in the equities and they start buying more instead of positioning their portfolio to start taking chips off the table when there's a large rise in the equities market and start focusing on some other counter correlated opportunities, which is what we're going to talk about today. So, one of the big things that we see is when Wall Street gets really, really expensive, real assets, physical assets, assets that have a physical aspect supporting their valuation get really interesting. So, why is it that overvaluation in the equities market creates opportunities in the private markets, do you think, Brian?
Yeah, I mean, if you go back 100 years or so and you look at the price earnings of the market, you typically find a pretty clear indicator. When you have record high price earnings ratios, it's almost a clear indicator that you're going to have some sort of correction after the fact. These markets have been interesting the past couple of years, but if you look at the heads of JP Morgan, Goldman Sachs, some of these large banks, a lot of them agree that the market is very highly valued. Our traditional, call it trailing 12-month PE ratios sit at currently about 30 right now. Probably a more accurate number is the cyclically adjusted price earnings ratio, which is more in the tune of about 39 to 40. Now, to give you some context, typically we see markets trade anywhere from 10 to 20. So, from all indicators, we are 2 to 5 times higher than traditional earnings would indicate. The real interesting thing that we've seen is if you look at the market capitalization of the S&P, as a lot of us probably know, it's dominated by the big high-tech firms, the NVIDIAs, the Microsofts, the Apples. And then if you look at the price earnings specifically for those companies, I was just looking at this yesterday. NVIDIA is currently at a little over 45 price earnings, Apple 37, Alphabet 31.8, Microsoft 34. Tesla's kind of an interesting. Tesla's trading at 304 currently multiple on their price